Welcome to the RCTV In Conversation With podcast. Our host, Mark Bunting, brings you the latest news, industry trends, and investment ideas from the junior mining sector. In this week's episode, Blackstone Minerals Managing Director Scott Williamson delves into the company's determined plans for 2023, their strategy to become a net zero producer of nickel for EV battery makers, thoughts on the current nickel industry, and more. And with that, Mark, over to you.
Joining me now is Scott Williamson. He's the Managing Director of Blackstone Minerals. Thanks for joining us, Scott.
Yeah, thanks for having me, Matt.
Now, your company's goal by 2025 is to be a net zero producer of nickel products for EV battery makers. So can you give us a snapshot of the strategy?
Yeah, so the strategy is really driven by the ability to vertically integrate from the nickel concentrate all the way through to the downstream products required for the lithium-ion battery. So we're looking to produce a precursor product, which is a combination of nickel, cobalt, and manganese in a ratio of around 8:1, but using hydroelectric power, also using electric mining equipment, and really driving towards a net zero outcome from day one. So yeah, it's really about that vertical integration and also the hydromet process that we're using as well, very efficient downstream processing of those nickel concentrates to produce the chemical products for the lithium-ion battery.
Your company hit a milestone a while ago with your 12-month piloting program where you determined that you could indeed produce battery-grade nickel sulfate at low cost and with low emissions. So what's the significance of that?
Yeah, so it's been about 12 months of piloting, and it's a really big investment from the company to confirm that we can produce those downstream products. But most importantly, we can get strong recoveries as well. So the recoveries we achieved in the pilot plant phase were slightly better than what we'd assumed in the pre-feasibility study phase. So really strong recoveries, but it's really about just confirming that the flow sheet is ready to move into a commercial phase and producing those products so that we can then use those samples for our downstream partners, so that our downstream partners can now take those nickel sulfate and cobalt sulfate samples and they can confirm that they are battery grade, and then we can move into the next stage of discussions with our downstream partners.
Scott, you've said that current nickel infrastructure is tired and dirty. So what are the main differences between the way you're attempting to do it clean and green versus the way it's been done for decades?
Yeah, so the current nickel industry is set up for the stainless steel market, and what we use is a pyrometallurgical technology, and so we see the future being towards a chemical product, and the better way to produce that is through a hydrometallurgical process. So we have a blank canvas, so we can set up this refinery for the chemical products, whereas the previous industry is all set up for stainless steel using this pyromet technology, which is not as clean and green. It uses a lot more carbon, and it's really combining that with the renewable power as well. So yeah, setting it up with good renewable power from day one, but most importantly using a hydromet technology, which is much more efficient for the chemical products than the stainless steel industry, which uses a pyromet technology.
Scott, you've said before that your company, in order to deliver and execute, you need to come through on the technical side with partnerships and on the funding side. So where are you with your active talks in terms of funding?
Yeah, so the funding will come from downstream players, and those downstream players will also bring some of the technology required to convert the nickel sulfate, the cobalt sulfate into that precursor product. So they'll bring funding, but they'll also bring some of that technology in those downstream products as well. So those discussions are ongoing. Recently went to South Korea, and we're progressing those discussions. And that will start to really form as we complete the definitive feasibility study over the next few months, but really integrating those partners into that final stage of that definitive feasibility study. So yeah, we're getting to that pointy end where we complete the study, we lock in the partners, and then we look at a final investment decision and start the build phase.
And then the timeline for a definitive feasibility study and the final investment decision, do you have a rough a rough idea there?
Yeah, so we wanted to achieve that all this year. So definitive feasibility study, we think we can achieve within the next 6 months or so. The partnerships will be ongoing between now and then, and hopefully we can come to the market with more details on that before the completion of the study. So it's really about final investment decision this year and then starting the build phase early in the new year.
Lastly, Scott, in terms of investors, what would you say the 2 or 3 main points are of the investment case of Blackstone Minerals that will make investors interested and get them thinking about buying the stock?
Yeah, I think the number one thing is a strong resource base. So we've got 485,000 tonnes of nickel in resource. We've got a 10-year mine life, so we've got a good resource base to build upon. But the ability to produce those downstream products with our partners is what really, I suppose, it shows that we're a little bit different to your average nickel developer. So strong relationships with the battery end users that allow us to produce those downstream products, combining that with the renewable power, the electric mining equipment, and driving what will be a net zero carbon outcome as quickly as we can. It's really about that ability to produce those downstream products, which have a significant value add to the investors. So these products trade at significant premiums to the LME nickel metal price, so up to 20 to 40% premium. So driving very strong economics, which is driven by those strong relationships with the battery end users.
Thanks for the update today, Scott. We'll be watching, and we'll talk to you down the road.
Great. Thanks, Mark.
That's it for this episode of the RCTV podcast. Remember to like, subscribe, and share to learn more from CEOs, industry experts, and to dig into the world of mining.